Switzerland was supposed to be a small, neutral, and peaceful country, but they just got hit with 39% tariffs coming from Trump and the United States. So let's dive right in about what is actually happening and why those measures have been taken. So first off, we need to start with the reaction of the Swiss, since this actually hit them on August 1st, which is Swiss National Day. So pretty ironic there. So a lot of confusion and anger, according to this BBC article, hit with the highest tariffs in Europe. So this was even worse than the European Union negotiations that everybody criticized it so hard. So this is actually the fourth highest, behind only Syria, Laos, and Myanmar, and also the 50% tariff that just hit Brazil as well. And also, according to this Wall Street Journal article, so Trump's slap in the face puts neutral Switzerland in trade war crossfire. So let's understand what's happening here. First off, this is the Swiss franc. So the Swiss franc is a very interesting currency used as safe haven on risk off moments. But this creates a lot of trouble for Switzerland, because if you have a lot of demand based on its stability and the fact that it's scarcer, but it's not that liquid as people think, because it cannot compare to how deep the euro dollar system, so the dollars outside of the United States, actually is. But they are used exactly to that matter, right? Since they are scarce. But this creates a lot of trouble for the Swiss, because if you see here, so we are currently at $1.23 per franc. So it's extremely strong against the dollar, and it creates some trouble to exports. And as you understand, so Switzerland is very import and also very export dependent, because it's such a small country, less than 10 million people. But due to the fact that costs are so high in Switzerland, they are specialized in high-end machinery, of course the watches as well, pretty well known, and chemicals as well, and pharmaceuticals like Roche, for example. And they depend on imports for everything else. So they really go for the high-end stuff in small volumes, and also gold bullion is one of the main export products to the United States. So why did they get hit with 39% tariffs? Is that, are there tariffs placed by Switzerland to U.S. products? Actually, not really. It's just zero. But there is a trade imbalance. I think it's 25 billion against 52 billion against the United States, so on a trade deficit. So this is one of the reasons that they discussed, maybe about that trade imbalance there. But it's not only that, for sure, and the volume is not even that big with such a small country here. So there's more stories to be told. We also need to understand the interest rates in Switzerland. They along with Japan, I talk a lot about Japan as well, those two countries are actually in the vanguard of experimenting with zero or negative interest rates. And after the pivot, so they were, if you see here, they were actually at minus 0.75%, and then they raised rates like everybody else, but they were the first ones to actually cut and pivot. And now we are at zero interest rates and towards negative, which is already being seen by the Swiss National Bank, the SNB. So why is that? This is a way to punish investors who try to hold Swiss francs, because they're trying to revert and make the Swiss franc a little weaker, so that they don't have the exports hit too much. However, by doing so, or even printing more francs, which the Swiss have absolutely been doing, it creates also problems with the United States because the Swiss have been put onto a US watch list for currency manipulation. So they're not being accused of that yet, but just put into a watch list to see what happens. And Switzerland, of course, denies any kind of currency manipulation. So it's not really a great situation to be in. And as I said, so you also see CNBC articles saying how the Swiss franc's safe haven status is actually creating lots of headaches, as we just discussed. So we discussed how important that is as well on liquidity cycles in our Bitcoin report. Switzerland for sure is also part of that as well as a crypto haven, so to speak. So the Swiss economy is not doing that great as of now. So also struggling with deflationary cycles there. So it's important for us to understand that those stimulus and or defensive measurements are also taken into consideration into what happens to risk on assets, especially like Bitcoin, like our global digital commodity. So we have a great scenario here that we discussed in report 2022 as well, if you want to have access to it. So understand what to do, right? How should I buy Bitcoin? Is that a risk on environment still? Why are they defensive? So many countercurrents for you to really truly understand what's going on. Truly recommend you to just have a look at our report. So links are on the description below as well. Make sure to use the promo code as well. Okay. So Switzerland is actually in a pretty tough position. So we need to see what's going to happen from now on, because they're still open to negotiations with the United States, even though they already have the 39% tariff in place. So this is going to be very interesting to see. I would watch for sure CHF USD, so the Swiss franc towards the dollar, see if that trend will continue, because that could create a lot of trouble to Switzerland. And any kind of counter punches to that, anything that the S&B might do by them being already placed on a watch list could create maybe geopolitical problems. And Switzerland as a neutral country is really in a tough position here, because choosing sides is not really on one's nature as being a neutral country. So this is going to be very interesting from now on. So let's watch that. And of course, it's one of the currencies that are liquidity negative in what comes to price, but based on the fact that the US is stimulating a lot, China is stimulating a lot, Switzerland doesn't really count too much. However, it's more as an indicator of a risk-off event, and that things are not going that well in the real economy. So let's wait and see. I hope it provides a little bit more tools for you to have a look on something that is happening in the heart of Europe as well. So see you guys in the next video.